Here's the latest from Wall Street. The financial world is holding its breath as markets react to a seismic shift in the Federal Reserve's leadership, and the implications are anything but simple. Just one day before the Fed's crucial rate decision, the Senate confirmed Donald Trump's nominee to the central bank, Stephen Miran, sparking a ripple effect that's leaving traders and analysts scrambling to decode the next moves. But here's where it gets controversial. Will this appointment tilt the Fed's policy stance toward deregulation or signal a new era of market-friendly interventions? Let's dive into the details. S&P 500 futures barely budged Monday night, hovering near flat territory as the Senate finalized Miran's confirmation. NASDAQ 100 futures slipped marginally by 0.07%, while Dow Jones Industrial Average futures tumbled 40 points, 0.09%. This muted reaction contrasts sharply with the previous day's euphoria, when both the S&P 500 and NASDAQ Composite shattered records, with the S&P 500 closing above 6,600 for the first time in history. Investors were clearly in a celebratory mood, buoyed by Trump's upbeat remarks on U.S.-China trade negotiations and a surge in tech stocks. Alphabet and Tesla, for instance, surged by over 4% and 3%, respectively. Acting as turbochargers for the broader market, Michael Kantrowitz of Piper Sandler summed it up on CNBC's Power Lunch. For the first time in 3 years, we're seeing a broad-based optimism in earnings forecasts. Many of the clouds that once loomed over the market have started to clear, but this optimism comes with a caveat. The Fed is set to announce its rate decision Wednesday afternoon, and traders are fully pricing in a 25 basis point cut, according to CME's FedWatch tool. Yet the real drama will unfold when Fed Chair Jerome Powell steps into the spotlight during his press conference. Will he hint at a longer-term easing cycle, or will his words reveal cracks in the Fed's confidence? And this is the part most people miss. The market isn't just reacting to the Fed's actions. Tuesday's economic calendar is packed with data on retail sales, import prices, and housing metrics, all of which could sway investor sentiment. Meanwhile, after-hours trading revealed mixed signals. Dave Buster's shares cratered 14% after missing revenue estimates, while Rocket Lab and Oscar Health both slid on major financing moves. So what's next? The Fed's rate cut is a given, but the why behind it is where opinions will clash. Some argue it's a long overdue correction to support growth. Others see it as a panic button for an economy teetering on the edge. Do you think the Fed's move will stabilize the markets, or could it lead to unintended consequences? Share your thoughts below, and let's dissect this together. After all, in investing, the devil is always in the details.